welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In each episode, we cover all things from the world of trading and we answer your burning trading questions.
We do indeed. We're back.
We are. Looking forward to this one. So we're starting with a really interesting kind of theme and topic, which is why have the success stats in retail trading not changed over the years? Now, I think for some of the maybe the newer traders, they probably don't even know that they haven't really changed. But those of you that have gone on and when you've applied for your broker account, you'll see at the top of the screen or somewhere where it says X percent of traders, usually around 75, 80% of traders don't make money. So they're not consistently profitable. And you can pretty much go to any broker and it will say the same thing. And the fact of the matter is that stat hasn't changed. So despite the fact that we have algorithms, all these different systems that you can trade, we've got all this higher technology, we've got all this stuff going that is essentially in our favor as a trader. You've got all this information out there on social media and on the internet. The success stats for retail traders are pretty much as they were 20, 30 plus years ago. So why do you think that is?
Because, sorry, as a message came up on my phone then. The reason is because we are human. That is the reason. We are governed by our internal dialogue of fight and flight a lot of the time. So we are pre-programmed to run away from dangerous situations and run to comfortable situations. And that is not good for trading. So within our absolute core DNA, when you take fight or flight, you're going to have a few losers. Oh God, you run away and, and then you miss the winning trades, or you have a few winners and then you get overconfident and then you mess up in that way as well. So I think at its absolute core is because we are human, and it's the core things that keep us safe in the world over thousands of years are not the things that keep us safe or make us profitable, should I say, in the trading world. And actually, as far as the trading stats are concerned, it's probably over 90%, even though brokers show it's often 70% or so. That is a rolling quarterly figure. So, yes. Which can naturally flatter their numbers. It's probably more like 90% of traders that fail. But and that's why we're always saying mindset, because it's the psychology. That's why traders fail. It's not necessarily because their trading strategy is wrong necessarily. Most of the time that people blow up, they're not blowing up because their trading strategy is wrong. It's because they've over leveraged and over traded. Yeah, that sort of thing.
Yeah, I'm still having the same conversations with traders that come to me that are struggling. It's not for a lack of information. It's not because of a lack of strategy. Most of them that I work with closely have already got some framework or a fairly, they're not stupid. They're not saying, oh, okay, this strategy doesn't work, I'll trade it. On paper, it works. But the fact is, it comes back to the old saying, which is the strategy might work, but can the trader work it? And it's for the same reasons that you've said. And I think what can almost make it more difficult for traders now is the fact that there's so much information out there, so many, it's easily accessible, different systems and strategies, that it almost makes it easier for the trader to strategy hop or change what they're doing, because it's easier for them to go and find an alternative that they think is the solution. So actually what's happening is the information and the sources of information in social media is perpetuating fear and greed. It's allowing that trader to go and try something different and change when they maybe needed it that moment to stick at what they're doing. And the illusion of choice means they can think, oh, I'll just keep fiddling around. I'll keep changing this. I'll go here. I'll go there. And actually, like you said, it's not that they need a new strategy. They need to look internally rather than look externally at what
yes, isn't it fascinating that there's more access to more information now than there was even 20 years ago, turn of the century, 25 years ago, way more access to information. People couldn't find strategies 20 years ago, 25 years ago, not freely available on the internet. They couldn't, and information wise. So people in many regards have more information, more technical know-how than ever before, and yet the stats haven't changed. And that's why I keep saying it's mindset. That's what's messing people up most of the time. It's not their knowledge. They're probably more knowledgeable than someone who started trading in 2000. Someone who's trading in 2025 has access to so much more information, great charts, all this stuff that they have available to them, better spreads. Spreads in 2000 were pretty wide. It was 3-4 pip spreads on cable in 2000. Now, there you go, sir. It's now 1 pip. And they still can't make money, so to speak. So
Yes.
What is it? And nothing's changed. Our core DNA has not changed. It's interesting, actually, talking about our core DNA, so to speak. You remember that old, and there's been a few of them, study that was undertaken, I think it was in New York, something like that, by Harvard or one of the big universities. And they went around New York offering people, it was something like $10. Right, you can have $10 now, or you can have like $20 but in a month's time or 2 weeks' time, whatever it was. And the majority of people took the money now, even though they could have 100% more money if they just waited. So delayed gratification as well. So there's all sorts of reasons why people fail, but one of which is it's very difficult to hold on to positions and all of that, or just hold on to your trade without wanting to bank the money early. And that was a good example of our core DNA, which we're doing battle with, that we just want to grab that money now rather than, even if we're told, look, just do this and wait 2 weeks and you can have 100% more. No, I'll have that $10 now. So that's what we're battling against. That's just one example of trader psychology. But it's a fascinating one. And I suspect in 10 years' time, it will be no different.
I agree. On to our big question. I'm laughing about this one. So the question, is 1% a day realistic? I think what's happening here is we're just going to keep going down until we find a percentage that we'll say yes to. So we've had the question, is 2% a day realistic? Well, we've said no. And then someone said, well, is 1% a day realistic? So we can, I think the answer is going to be pretty much the same. But again, it's this idea of traders looking at a chart and the ability to make 1% on any given day is realistic.
Yeah.
Very easily done.
Yeah.
And the challenge there is this idea of, well, you combine that with what people are supposedly marketing of what is realistic. You can easily do that on any given day. So what happens is the trader goes through that same thing of processing out. Well, 1%. I've seen 5 markets move 20%, or not quite, but I can easily see a 1% move on a relative trade. I could have that. Oh, and then they'll say, no, but even if I had a loser, and then I could have another winner that day. So it's very easy for the trader to think that. But as you've said in the past, if you just extrapolate that out as 1% per trading day on a given year, and you look at that percentage return, and then ask yourself, is that realistic? So it's easy on any given day to see a market move or even capture that 1%, but to do it day in, day out is a very, very different ballgame.
Yeah. I have to laugh because some of probably the biggest pushback we've ever had in the comment section has been on this very subject, because people don't want to believe us when we say, no, 2% a day isn't realistic. Like you've already said, yes, anyone can make 2% or 5% in a single day. If you're risking 1% on a trade and you get a 3-hour trade, well, there you go. Like you've just said, trying to do that every single day, no. Let's just compound the numbers. So let's take that 1% a day. That's 5% a week if you're trading 5 days a week. If you would, this is the question. Is 1% per day realistic? So we're talking about an average of 1% per day. 5% a week, it's over 20% a month because there's 22 traded days in a month on average. But let's just say it's 20 days. So you trade 20 days in a month. So that's 20% per month. Okay, so that's 240% per year. Okay, is that realistic? And a lot of people will be saying, yes, it is realistic. And I'm going to say, no, it's not. Not to do every year, Because what we're talking about is consistency. That's the question. Can I do this per day? Is it realistic? And what we're saying is no, because there's very few traders who will make 240% per year every year, let alone per day. Anyone can make 1% a day for a week or 2 weeks or 3 weeks. You can't do it for a year. Or there are very few people that can. And one thing I've not mentioned is compounding.
Exactly.
Because you get to the end of the month, your month one, and you started off with 10,000, you've just made 20%. Well, you're compounding that, so your 10,000 is now worth 10,200. No, it's not. Yes, it is. No,
12,000.
12,000.
12,000. There you go.
Maths is great, isn't it? So yeah, so now you're at 12,000. The power of compounding. So you get to the end of the year and you've actually made it with compounding. It's probably, I haven't done the maths, but probably 500%. It is not realistic. And the problem is we get pushback on this. Doesn't matter what we say, because people say, oh no, I've done it. No, you haven't. Or you might have done it over a short period of time. Come back to me when you've done that solidly for 2 years, because it isn't realistic. So,
or what we get as well is, I've made the equivalent of 1% a day over a year. So let's say, for example, it was 240%. But what you're not, when you dig a bit deeper, you find out they were risking 5% per trade. They've had a winning run. They've got lucky. So they said, well, it is doable like that. People will flex the numbers any way they can to try and justify their want and desire. But what they're not factoring in is the fact that even if you were carving out 1% a day, so once I've hit my 1%, that's it, I stop. Or I make 2% on one day and then I don't make nothing the next day. But they don't factor in the drag that will happen with a strategy. So there will be a period, a week, a month, where they'll have a drawdown. So suddenly it's not a case of making 1% each day, every day anymore. They've got to make 3% every day just to get themselves back to the point of where the 1% cumulatively would have been. And they don't factor things like this. They just look at one day and say, well, I can do it on a day, so why can't I logically do that every day for a given year? It doesn't work like that.
The reality is that there are some amazing traders out there, but they are to have that kind of consistency, they are very, very few and far between. And most of them, the ones that aren't on social media. They're just quietly getting on with what they're doing. We talked about this previously. It's not that you and I haven't had some tremendous years, individual years, but to make those sorts, this is what people want. They want consistency of returns. They want the market to be like an ATM machine or like a job, like a salary. Yeah, I'll make 1% a day and I'll put X amount in and I'll do that and then I'll make this amount of money. And it unfortunately just doesn't work that way. And I think it's a sad fact that people still want to believe that. They'll believe the stuff that they're told on social media. And the reality is, in a previous episode, we've talked about one of the very best traders that we've never come across, but is very quiet. And we've been told by a reliable source that he was by a broker, essentially, a massive broker, and said, this guy is one of the best traders, or the best trader we've ever seen. And over 15 years, he consistently, did 300% a year. But that's someone who's an ex-banker who is like Rain Man, who just looks at numbers like no one else is going to look at them. And so he is a unicorn. He's very different. So the average person isn't going to be sitting there making 1% a day, 240% or 500% in a year, every year. Yes, you can do it. And we don't want to say to people, because anybody could have a stellar year with whatever their approach is, but don't expect it to happen each and every day, each and every month, or each and every year. It just doesn't work that way, unfortunately. Because if it did, there'd be all these amazing, there's some good traders out there. You and I are not bad, but we don't make 200% a year every year. We'll leave that to that unicorn and one or two others out there.
Yeah. And I think, like you said, this isn't to deter people, but if there was a little bit more realism out there, you'd probably find, actually, linking it back to what we're talking about, the success stats would actually go up because people would have a slightly more realistic approach. Indeed. So on that note,
his name's Ali Crooks.
His name's Charlie Burton.
Trade safely out there.